Is Gen Z really the death of alcohol companies? We're going to take a look at Diageo.
Is it getting to a point where maybe the world is thinking too many bad things about the company and there's a lot more upside than downside? Tune in to Altimetry Authority today.
Let's talk earnings and favorite pastimes.
So let me just say, earnings
were by Wall Street. It's 2.5x
because their compensation goes up.
Wall Street's wrong again. All right, Joel. The headline for a while has been Gen Z is drinking less and going to destroy the alcohol industry. We took a look at Diageo, and let's jump in. What do you really think is going on here?
Well, they said Gen Z is drinking less, but that's not the only population of drinkers in the world. I mean, the boomers, the Gen Xers, the millennials also drink. And yes, the Gen Zers are probably smoking a lot more marijuana, and that's keeping them from drinking as much. My friends went to Burning Man this year, and they said they noticed how alcohol and cigarettes were really frowned on, but man, were alternatives for, I don't know, I'll say getting high or whatever, getting inebriated, were everywhere at the concert. And so there is some amount of trend against drinking alcohol, but maybe that's not, what's really hitting Diageo in this case, and that's the company we're looking at. So the stock has been down not just for the last year, but Diageo stock has been under pressure for several years going back. And if you look at Diageo's chart, it's almost an exact opposite of the U.S. dollar. And so as the U.S. dollar gets stronger, got stronger and stronger and stronger, and given that 60% or more of Diageo's sales are non-U.S., you can see why they have some currency issues. I mean, currency exchange is an issue for them because that kind of down. Now, the dollar getting a little weaker may actually help in terms of this stock being more valuable in U.S. dollars terms because they might be able to sell a bit more alcohol around the world. All right, now, going back to the preferred alcoholic beverage, I mean, again, is one of the issues is, are people drinking quite as expensive alcohol as they had in the past? And Diageo certainly makes some expensive brands. One of my students was at Diageo, and he was leading the team that invented the Singleton. I mean, they actually invented and created from nowhere a single malt Scotch whiskey or a blended whiskey based on getting the right casks and getting the right producers and whatever else. It's a really interesting thing, this business, and it's a high end, and it was priced to come in at a higher end, maybe not the highest end, but a higher end in the alcohol standpoint. So we don't see necessarily that alcohol is going away. It's just, there's a trade-off in the mix of who's drinking and what they're drinking. So I wouldn't say that the demise of alcohol is here just because of the Gen Zs.
And then, I mean, even to your point, Joel, right? I mean, if we look in terms of aggregate consumption, the data does not seem to say that alcohol growth may not be growing as fast as it had been before. And obviously, if we're going to be real, if you look, this is just a chart in terms of aggregate spend in the U.S. Obviously, some of this is because a lot of the growth that we might have had over the last 5 years was oddly pulled forward into 2020. I forget why people were just sitting around and drinking a lot of alcohol. I don't know if you remember, Joel. But if you look, everybody, right, if you were to basically smooth out that 1-2 year gap up, we're really basically on trend in terms of where we are for growth. So there's this narrative out here, right, Joel, that, hey, there's nobody's consuming alcohol anymore. We're actually just a mix shift, but the trend is still there. And I think that, right, that's the interesting thing when we jump into Diageo, because the as-reported metrics make it easy, right, Joel, for you to make the argument that Diageo is, a business that's under pressure.
When you look at the as-reported numbers, you would assume that the numbers, right, given the global average is around 6%, they're slightly higher than that. The U.S. corporate average, though, is 14. And so when you look at the as-reported ROAs, you would assume that they're much lower, right, than what's happening. But when in reality, when you take into account all the accounting issues, you actually find that the ROA of this company is a really high 15, 16, 20+% return on assets, and that number has been climbing into 2024. Now, if we take those returns and we take Wall Street's pro forma forecast for the next year and a half or so, which tend to be good numbers, Wall Street is expecting bad things. And part of this has been yes, the ongoing strength of the dollar. You would think that Wall Street would recognize that a weaker dollar might actually help this company in sales outside of the United States, especially when converted back into dollars of revenue for all the people that hold the stock as an ADR. But I think also the tariffs, for some reason, the idea of bourbon or whiskey or anything that might be a U.S. brand has come under fire internationally under the tariffs. Like it's become almost like a scapegoat for, well, if you're gonna put tariffs on us, we're not gonna buy U.S. alcohol. I don't know if that's necessarily the case, and maybe Diageo's, I'll say U.S. thought of U.S. labeled U.S. brands are seen that way. But either way, there's a lot of overhang that the Wall Street analysts are bringing in, and that brings the returns look down. Now, what the market's pricing in at $26 a share or $58 billion market cap is that this return fall is going to just drop like a cliff. At that point, given alcohol consumption is still strong, given, yes, there's some volatility in what's going on around the world in alcohol consumption, this seems like a fairly abysmal forecast. I don't know what you think, Rob, but this looks like one of those heads you win, tails you don't lose, because there's not that much further you would expect this return could go. And yet, given that alcohol is still being consumed, and Diageo does a great job of managing its brands and creating, I'll say, new brands and new alcohol and what have you, why wouldn't these returns actually, come back to a higher level than they've been, and at least Wall Street's forecasting in, which means this stock could have a lot of upside.
Right, and to your point, especially if you're a U.S. buyer of the U.S. ADR, as you highlighted, Joel, right? I mean, the U.S. dollar is not strengthening; it's neutral to getting weaker probably in the short term, which even gives you more of a bounce. So yeah, I totally agree with you. This one looks like one that could be really potentially interesting, everybody. So keep an eye on Diageo, and if you enjoyed this conversation, hit the like and subscribe button, and come back for next Altimetry Authority episode. Thanks so much, everybody.